The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once again, back into the breach, dear friends, after a good 3-day weekend. And, of course, as we start the show here today, we're off 3 points on the S&P cash, 2.44 billion shares, as we start looking down the muzzle of an earnings season where many of those earnings have fallen short. But you can't find a bearish bone on CNBC or Bloomberg. They're all buy. So the question is, what will be the net effect of QE in Europe if that does go through this week? Will Germany basically bear the brunt of the entire EU, as they have 80% of the money? They're going to have to probably kick in 95% of the QE. Question is whether or not that will happen. France doesn't have any money. They're miserably lazy. The Greeks are leaving. It looks like there's a 98% chance that the commies are going to win there. So we can pretty much assume that they're going to leave. So as Europe goes down in flames, the question is, are we going to be a little smarter like the Swiss, or are we going to follow them down the path of destruction based on a belief that we can just redistribute ourselves out of the problem? And my guess is no. But I do digress. We had pretty decent volume for today. We got down to a low of 2004 on the S&P cash. Today is options rollover, and because of so many things going on, the volatility and much of the action today, I don't putting a lot into. I suspect that we're really going to see the direction of the market starting tomorrow. Of course, there's nothing that happens that isn't positive for the market if you listen to the talking heads. If crude goes up, it's good. If crude goes down, it's good. If crude goes sideways, it's going to make the S&P go to 5 million. I kind of like being on the opposite side of that trade right now. Doesn't mean I'm right, but it does mean that I'm probably on the side that has the big move if it does happen. I think it does. And there's probably enough evidence to suspect already with 20% of the companies in the S&P reporting that not real cheery stuff so far. There is one bright spot in the markets, and that is that with the lower gas prices, people are going out to eat a little bit more. We'll talk about that today. But for the most part, it is fairly quiet on the Western Front. Again, looking for tomorrow to continue the move down. And I've been pretty much accurate about the movement. If you listened last week, I thought we were going to probably close somewhere around 30 on the S&P. I was 10 points off. I think that's close enough for government work, and pretty accurate at least for the movement. We've got an early caller today, and we're going to go right to him. Sam in Philly. How you doing, Sam?
Hello?
Yeah, how you doing?
How you doing, David?
Good.
Good. I'd like to ask you, what do you think about Harmony Gold, HMY?
Looks to me like it's going to 329 to test that previous high from July 21st of last year. What do you, are you in this right now?
I'm in it around 250.
Okay. You got to about 329 where it's going to come into those moves. And if you were really lucky, 344. At 250, you got in way late in this trade. So I would say that, you'd want to probably be getting out earlier, not later. But I think any of those candles around that July 21st high out there, I'd probably be taking my money. And if you were in this thing more properly, maybe down at the $1.80 level or something, or $1.90 level, you could probably hang on. But your risk reward here is probably pretty poor if you get a retracement in this. So I would just say you've got a good trade going on now. I wouldn't, just because you got started late, you got to take your money early.
Okay, but you don't think it's going higher than that right now?
Oh, you've had a huge move off this low with lots of energy.
So it's going to retreat, yeah.
Well, I'm thinking you probably can make a pretty good case that you're going to at least get a retrace to 250 on this, and that's probably where you'd want to buy it again.
Oh, so, okay.
I mean, like I said, you're probably going to see 329 late this week, but what I dislike is volume the last 3 or 4 days. You should have had some accelerating volume. I would have liked to seen something like 10 or 11 million shares as this thing started to move back up. And then this thing may probably get up to that 329 level maybe, and then pull back first to 270, then maybe over a week or two get back down to 250 or something. If the volume all falls out, then that would be your next ABC probably on the move up.
Okay, because it's losing momentum now, yeah.
Yeah, there's just now, does that mean that it's not going to come up and tag the 329? It certainly looks to me like with all the uncertainty over the next 2 to 3 days and into next week with the FOMC, you're probably going to have a very light volume move. Once all the news is out in this news cycle, at least for the central bankers, my guess is you're going to have a fairly decent pullback. And then you're going to be able to find and look at other stocks besides Harmony and find which one is the strongest gold stock then, and then try to play the next ABC up.
Perfect. Do you have time for one more? Or
Sure. Go ahead.
How about Johnson & Johnson, J&J?
Yeah. Reported this morning, missed on revenues, back into its gap, but that gap didn't have a lot of volume, so it's not going to act as support. Headed back to $94.40. What are you thinking on this?
I'm thinking about buying it around like 95.
You could. I don't know why you would. There's just not enough risk reward. What are you thinking? It goes from 95 back up to 101?
Yeah, I see your point. Probably wait and see if it's going to go down to 87 or something.
To me, there's just not enough meat on the bone whether it did it or not, right? But let's say that it gets down to $94, does a 50% retracement, gets back to 101 or 102. That's $6 on a $95 stock. Unless does it give you the risk reward? I think it does, but this is a slow moving stock and probably going to put your cash in a slow mover like this, or find a stock maybe more like gold that would make you a lot more money a lot quicker. I'd rather be waiting at Harmony at 250 than at $95 for Johnson & Johnson. But just my opinion, there's probably less risk that Johnson & Johnson falls in half.
Sure.
But there just isn't a lot of meat on the bone to be risking my money on something like Johnson & Johnson.
Okay.
Okay.
Thank you very much.
You bet. Yeah, 83 would give me, back there at 83 on the February 4th low of 2014. That's where I'd want to buy that for possibly a move to 108 again, if this isn't a big upper trading range. But just know that, 83 to 108 may take you 3 to 6 months to get back up there, right? If the market continues to be bullish. If it becomes bearish and it gets down to 83, you may not even want it then. Okay. Thanks, Sam. What else do we have out? We're going to get back to our news already in progress. Anyway, we had a lot of stuff going on. And of course, back in this day.
And it's all just a little bit of history repeating.
Back in 1881, this chart is wrong here. I put the 1, Let's make it correct here. In 1981, minutes after Ronald Reagan's inauguration as the 40th president of the United States, 52 captives held in the U.S. Embassy in Tehran are released, ending the 444-day hostage crisis. Kind of interesting to me. I wasn't spending a lot of time in politics at the time, but we had an incredibly weak president, up until recently thought as the worst president back into 1870s. Jimmy Carter, and of course he continues to run around talking trash anywhere in any foreign despot's country that he can. So he's not failing to disappoint after all these years of being a horrible president, continuing on as the ambassador for those who hate the Americas around the world. But from then on, it was kind of like his mismanagement bottled up a lot of pent-up demand and just a few tweaks to the economy, and it started taking off. A lot of that, of course, was Silicon Valley really being the engine of growth after the next few years. But I'll always remember 20% interest rates on homes, all the stuff that he gave us, and his malaise speech, which was rather historic, and hasn't really changed in all those years. But just to let you know what happens, of course, after we close tonight, whatever it is, 8 o'clock or 9 o'clock, the president is going to be giving his State of the Union address. Over the last few years, it really has become less and less of an issue. I suspect that unless he tries to overthrow the government, it is meaningless tonight, and I think everybody knows that. It's just as important as our border with Mexico or pickup lines to Brad Pitt or underwear to Sharon Stone. It just doesn't matter. Anyway, big trouble in Little China. If you missed yesterday's move in Shanghai's composite index, it was the biggest move since 2008 as they started talking about going after people that basically were jury-rigging the stock market in Shanghai. It was down 8.3%, and of course, nary a minute of discussion on it. I think I could have put a stopwatch on it so far today. I fast-forwarded through CNBC. And if there was more than 30-second discussion of the biggest move in the Shanghai index, it was 30 seconds. And maybe it's me, but it certainly looks to me like at least the financial press is whistling past the graveyard, as they probably don't think much about what's going on. But it is what it is. But I'm thinking that as soon as we get over this options rollover in the next day or two, it's all about the action in the euro and maybe a little bit of earnings, and then off to the FOMC next week. But if earnings keep coming in as they have today, then it will be it'll be problematic. We will be back in just a minute. I got some excellent words from John, from Mr. Chanos. Be back in just a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Check out the new look of Tiger TV. Now you can see all hosts, charts, and computer screens live in high definition. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV. Now, crystal clear in high definition, 24 hours a day, 7 days a week. If you haven't seen the new look of Tiger TV, then visit TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
You can be like Sam in Philly and give me a call at 877-927-6648. You can email me at path@tfnn.com, as Wayne from Dallas did, and we'll get to his question in a minute. Or you can post a message in the den, and we'll get to it as soon as we can. Wanted to get a few more things out of the way. On Friday, Jim Chanos was out talking. If you're not familiar with him, there's only a handful of people that I listen to. Jim Chanos was pretty famous for being the guy that figured out that Enron was a total fraud. And he basically runs around. He's not only a short seller, but he is well known as a short seller because he'll go in there and rip the books apart, and he'll go short a stock a year and a half before it plunges to nothing, based on going through the books and seeing the shenanigans of what people do. But for the most part, not a lot of what he can say, other than if you want to dig into the paperwork, really matters. But he had some excellent points on Friday, and I'm going to talk about a couple of them. But here's a short segment of what he said, because I'm not an eloquent speaker. I can make sounds that come out of my mouth, but when some real brilliance comes out, I like to snag it and play it on the show.
Buybacks individually can be a great thing. However, if everybody is doing it, and then that is really the case in the numbers we're seeing, if you think about it, buybacks, if you're a corporate CEO or CFO, you can invest back in your business or you can buy back your stock at what you think are cheap prices. If everybody's buying back their stock, what they're telling you is they're buying the stock market.
And basically, isn't that right? They think that they can make more money buying it back in the stock market than actually expanding their business. So what does that tell you about the future of what they think and the sustainability of any growth that they have?
They're not, that's all they're doing. They're hoping to get a return, a stock market return, which, may be high single digits over the long period of time. Corporate America has returns on capital double that, 15 to 20% pre-tax. So by making the decision on the margin to buy back their stock, they're telling you a few things. They're telling you their profits are not sustainable at these levels. They're happy to take 9% instead of reinvest in another chip plant or another.
So but basically, I think you get the point on that. But rather interesting that you think that, why are these people buying it back? He goes later on to really say why they are buying it back. And he's basically dug through a lot of the paperwork, and most of the contracts with CEOs say that there is either a issue on the EPS and or margins and or the overall revenues for the company for why they get paid. And for them, much, much better deal on getting paid than actually building a company. And I think there's a lot of good thought that's gone into this. He's pretty famous. Most of the short sellers that I know are either raising a lot of capital or already putting that capital to work. So I'm thinking we're probably pretty good up here for a long-term short, not just a short-term one. But Chanos is going short, and of course some of the other big-time guys are, and I think we're pretty good. Andrew Heck, of course, who's back here on Tuesday, says, "Rant on Europe, rant on, Dave." So anyway, what else do we have going on out here? I had somebody ask a question about FXCM. It was the firm that blew up on Friday because of the trading in the Swiss currency. And someone asked me, what happens to your options that expired on Friday? Do you, you still have the option to execute them. So anybody that had options expiring on Friday for FXCM had one thing, and that is before the close, they had to go in. Actually, I think you can do it all the way through Saturday morning. But you have to contact your broker and say, I want to exercise those options. Now, since you don't know where it's going to open up, you are taking a risk of where it's going to open up. But I think you could probably make a good bet that at best FXCM was going to open at $6 and more likely $1.50 today. And that would be it. So you would have had to have enough cash in your account to do that. Previously, because I got caught in this situation during 9/11, to exercise your options, you used to have the broker used to be able to lend you the money long enough to buy it and sell it or exercise it and then get rid of it. So I don't know if that's still true. I haven't checked on that. I'll have to ask my broker. But either way, you still own the option, even if it doesn't trade. As soon as it starts trading, they will execute your put to the people. Anyway, we'll be back in a minute.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And if you haven't seen it, here's the Shanghai Composite chart, and the huge nosedive down, and 8.5%. I think it's gotten back 2.5% since then. But this is not the way bull markets trade, where the bottom just drops out every 2-3 weeks in an index. But this thing hasn't gone but 2 weeks before it keeps falling apart every time it rallies back. So just be very, how can I say this, cognizant that the rest of the world's moving, and the financial press here is choosing, for the most part, to ignore it and look the other way. But I digress. And of course, Andy Heck IM'd me during the break. We need to be watching that dollar index. It certainly broke through 92 and did not stop at 93.05 right now. My guess is this thing's headed to 98. And the question is just how fast does it get there after QE? My guess is we're going to have to see what the real numbers are and whether or not this thing doesn't blow up all in their faces, like I said before, because the brunt, 85-90% of all of the money for QE is going to have to come from the Germans, because no one else has any. They've all spent their seed corn. So there is, I want to thank Steve Rhodes for bringing up that the risk is that they do nothing. and why the Chancellor of Germany says that the deal's done. Somehow, I don't know that for a fact. I'm not saying it's going to happen, but I don't say the probability is zero either. A lot could blow up in their faces in the next 2 days. But maybe that's why gold's moving so well. Another question out there about options before we get into requests for other people. And that is someone was asking me about options, specifically on Apple. And one of the things I try to look for is an implied volatility below 30%. And if you go to ivolatility.com or any of the other sites with options, you'll see the implied volatility. But if you ever go back and do a statistical test, you're going to find out that implied volatility is basically telling you what you're going to pay the premiums for and how much they are. And just like if you just burned your house down, not on purpose, but burned it down and then tried to get another house or had 3 accidents in a car, your implied volatility is kind of high. Your premiums are going to be really high. Once you start getting past 30, it becomes incredibly difficult to make money on one-sided options. Therefore, on Apple, I would have to say you want to look for stocks that have not broken down, have not started to pull back, and have not had their implied volatility already go up. Much like trying to chase the horse that's left the barn already or the cow. That's what's happened. Options have pretty much already escaped you. And the problem is they can burn off so much of the premium, even while the stock goes down, that you still don't make money. Now, 35% is not that bad, but a lot of times you're going to see these stocks with 60, 70% implied volatility or even 100% implied volatility. At 60% implied volatility, your chances of making money on a one-sided option are about 8%. So you've got a tidal wave or a tsunami going against you that they can run the clock out before your stock blows up. I'm assuming to the downside, but could be the upside too, depending on if it's a put or a call. Of course, there's implied volatility for both sides, and that's something you should look for. If you missed it also in world events out here, the Argentine prosecutor was found dead just hours before giving expected testimony against the current president of Argentina out there. And of course, they're fond of their socialism down there. But communism starts with a gun to your head. Socialism ends one to your head. And if I'm looking for countries that could officially blow up into full tilt chaos, this didn't seem like a guy, although the official story is that he shot himself. Doesn't, from all his friends, he was looking forward to giving testimony. And yeah, we could see a lot more problems, especially in South America. I think this is the tip of the spear as continuing problems probably go into Brazil and maybe some other Latin American countries before we go too far. We had a call on Thursday, and they were talking about Dish and the future of it. If you've been paying any attention to the news, I was talking about them putting up a bunch of satellites on Thursday. Of course, Friday it comes out that Google may be putting up up to $1 billion, and Mr. Musk's SpaceX, which I think is the best of his 3 companies with the best future. But Google looks like they may be putting $1 billion in there to have him basically launch low Earth satellites, and different than a lot of the internet satellites now that require a big dish. These things would be, I think he wants to launch some 460, 500. So does the guy from Virgin Galactic. So there's going to be a lot of companies out there wanting to put up a lot of satellites. Question is who makes it first, who will probably end up with the lion's share of it. But these are not geosynchronous satellites that are sitting up 25,000 miles above us. These things would be 200-300 miles above us in a constellation, much like GPS satellites. And right now, the latency for the ones out there 25,000 miles or 20 times worse than on satellite services. Apparently, from what I've read, the latency would be only about 5 times as bad with these low Earth satellite ones. So usable, but not as good as any terrestrial-based fiber optic system like I have with Verizon. It would be impossible for me to do one of my shows on these. But if you're in the middle of nowhere and don't have Wi-Fi access, probably not a bad option. And there's probably a billion and a half people that have cash and an addressable market. So probably not a bad business to get into. Google continues to look like they want to get into the ISP business and not have the denizens of true evil, AT&T, Comcast, Time Warner, tell everybody what they can do and when they can do it. Of course, we've got the vote for the internet on February 26th, and a lot of these international internet companies are going to be moving a great deal off of that. It is a mad market. We're going to get into stocks here. The first one was in my email, and that is going to see ISRG. And what do we have on this? Question is from Wayne in Dallas, shorting ISRG, and what do we have out here? Not down on heavy volume. The big problem with this is you need it to test 541, which is the April 3rd high. My guess is that you get that test before this thing reverses. You had 1.2 million shares on it. This thing has come close on very light volume, but it continues to hang out at these highs. If volume would have come in today, I would have said maybe this is over, and it may be. But your risk reward is much better if you can hit 540, 541 in the next few days and still end up with 500,000 shares or less. Then I would probably look at taking options on this, and maybe during the break I'll look at the implied volatility on these. But it's a good-looking short. My guess is that you get back down to 420, 415 on this and fill the gap. The question is if it happens all at once, and it's kind of tough to say. I don't know when their earnings are. Let's take a quick look. Earnings date. The problem would be, it's January 22nd. So you got 2 days out here. I would hate to make a play on this a couple of days in front of earnings. But maybe if it gets hit and then bounces a little, maybe you can play the ABC down. Risk reward's pretty high on this one. Other question was in the DIN. And see what else do we have out here. What was that? Somebody back up here. Alibaba. What's the buy on this? And I don't know if there's a buy on it. To tell you the truth, again, it's so much about what's going on in China. The question is, are you looking for yet another day out here? And I don't know why I'm having internet problems, but I've been having internet problems from California all day, which is where my data comes from. So let's see. Try once again. Come on. Give. Okay, there we go. Alibaba. This thing's pulled back all the way. If you were going to buy it and the market turned bullish, I'd have to look at 92 on Alibaba. It certainly looks to me like maybe this is a one-day bounce out of here. 92 would probably be that level of support you'd want to get in there. Let's see what else out here. Okay. So that was another one. What else do we have out here? Hello, Dave. Wondering if you could take a look at AM. I've been in the trade from 23.37. And who is this? It doesn't say who he is. It's a unnamed ghost. Just if you tell me where you're calling, where you're emailing from, and what your name is, I'd appreciate it. And then we know a little bit who's listening and what's going on. Our advertisers like to know that. So just if you put that in any emails to me. Anyway, question, what do you think is a good probability to get back in the stock would be? Sell at $35. Well, you got 3 million shares today going up against the high of October 15th with 4 million shares. You need more than 4 million shares to get your 35. So if this thing doesn't close with 4 million or 4.5 million shares, I would suggest that you probably take your cash already. If it does, then you probably have $38 is actually where this thing's probably, well, 37.25, something like that. It's going to where this big gap happened back on the, September 2nd out here. So, you've got decent energy and everything else out here. I would just look at the volume today if you don't get it. And of course, if you need to close over 33.25 today, so I would say either take your cash today or look for $38. If you're looking to have this come back and get back in again on the pullback, November 21st looks like the date to key off of. It got to a high of $27.67 with 2.9 million shares. My guess is there's a gap there too, right at 28. And you're probably going to find right at 28 or right underneath it is where this thing finds support on a pullback if today is the high in AEM. So maybe did I miss his name anywhere? No, he's just a customer at CenturyLink. That's all I know. Doesn't have anything else out there. Another question. We get a lot of them. How low do I see natural gas going? Lower than whale poop, apparently. This thing is down here, and it's got decent volume. You needed less than 14 million shares. You got 19 million shares. At least UNG is telling us that we're at least going to get to 1409. It hasn't broken that low. So is there an issue out here? Yeah. I don't know how much lower it can go. I know the Iranians were talking about after their discussions with the Saudis. The Saudis said that they were hoping to push crude down to $25 and drive everybody in the United States in the fracking business out of business, and then raise prices back up. But to me, oh boy, I just can't see a trade in here, at least from the UNG, that tells me this thing has bottomed out. But my guess is you may have to wait through the rest of the summer. You're going to have some kind of major event to restrict the amount of natural gas. And that is not out of the realm of possibility. If all these frackers turn off these wells, there won't be a lot of gas coming out of them, natural gas. And you could see a huge change. But my guess right now is this may be a play come midsummer again before you get an opportunity to really see this thing move. May take a hot summer and a lot of additional generation to get natural gas moving. But I don't know, maybe Andy will broach this subject in his show tonight at 5, or Tom O'Brien in the next 2 hours. We'll be back in a minute.
How would you feel if you had a powerful decision-making tool that has the ability to find high-probability trading opportunities across multiple time frames in equities, currencies, and futures? Search no more. Take advantage of the best trade with the TAS Profile Scanner. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to help them make the best and most accurate decisions. Scan over 1,000 equities, currencies, and futures instruments for high-probability trading setups utilizing the TAS architecture. As Seen on Bluebird terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time, for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. Subscribers will also gain access to the December 9th workshop with John Logan. There's no obligation to pay anything. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Yes, folks, it just doesn't matter. Just like the vows at a celebrity wedding. It just doesn't matter. Anyway, Time Warner made a nice high out here. Again, 50 cents short, or I would have taken this trade here, and that is a test of the July 21st high at 88.13. 9.1 million shares got to 87.44. So it got into the candle, but just 2.5 million shares coming down, actually down. One of the stocks down on heavier volume. It's repaired some of it on a huge downgrade of this stock. But I think everybody's starting to see the wagons starting to circle on Time Warner and maybe the FCC decision February 26. But one of the stocks that's down fairly strong. And other things moving out here. Looks like maybe we've started in earnest. The next move down in Yandex. This is the Russian internet company also. Volume picking up. It's going to go test this $15.02 low, but I forget which firm on Wall Street said, hey, you better leave now and grab your cash because this thing looks like it's in bigger trouble than we thought. Apache Corporation had some news out, but doesn't look like that thing moved. Copa Holdings, this one actually out here, you would like to see a little bit more volume. It's going back into the big candle where this thing reversed down on the 20th of November with 2.6 million shares, just 680,000 so far today. So I'd be watching this when people are talking about maybe finding stocks that you could short. Delta Airlines came out with some fairly decent news and said that even though they were hedged, they made a great deal of cash. Now, you needed a lot of volume out of this one, about 15 million shares from the December 12th high. And what that was, 49.62, busted it with half the volume on December 31st, pulled back today up on 16 million shares. So it certainly has the volume, but you need it to close over $49.62. Decker is the disaster du jour after the FX company. But again, a lot of news coming out about these retailers still having to have huge problems. I imagine by the end of the day, we're going to blow away the October 24th low at $80.01 with 3.3 million shares. We've already gone through that with 2.4 million shares already today. What else was it? Nice little bounce out of a low. I think I brought the stock up on Thursday last week, and this was going against its November 17th low for Synaptics, SYNA, the November 17th low, $59.02, 1.9 million shares. That came in the last couple of days, 723,000, 639,000, and not a surprise that it bounced up today. I think the energy was just a little bit too much coming off this high, so it's more likely to go sideways out here, but a nice one-day pop. We talked at the beginning of the show that most of the money that the people are now saving on gasoline is going into the lower-end restaurants. People are going to go out and eat just a little bit more. And the proof of the pudding is Jarden out with numbers today. It is going up, not breaking out. It hasn't touched the high on December 31st, $48.72. Certainly the January 20th high today, 1.9 million shares. So it's certainly got all the volume in it. Not able to touch that high so far today. But you're going to watch this one before the end of the day. We're basically down to biotechs and restaurants leading this market. Anyway, we will be back tomorrow, same bat channel, same bat time. Remember to sell when you can, not when you have to. And hang on for another 3 hours. Do a double shot of Tom O'Brien and then Andy Heck. We'll have a wonderful time tomorrow. But I think we get back into the downtrend tomorrow on this market. See you then.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. You're watching Tiger TV.